In the previous segment of the course, you learned about different types of leases and viewed additional total effective rent definitions. This segment of the course will describe how to analyze and compare multi-period leases. In this segment, we will calculate costs for a multi-period lease, describe how multi-period leases are affected by rent escalators and expense stops, view the calculations involved in a multi-year lease analysis. Calculating costs for multi-period lease is more complicated than calculating for a single-period lease. In a multi-period lease, two additional factors come into play. Base rent may escalate at predetermined amounts, at stated intervals, or by a constant annual percentage. The owner may agree to pay operating expense to a certain level. The expense stop, expenses incurred. The most common determination of an expense stop year expenses in the actual amounts incurred in the base year of the lease term. Your client is considering proposals from two similar buildings for a 5-year lease. Both are 3,500 rentable square feet in size. Lease payments are made annually at year-end. Now let's see what happens when the lease terms change over time. Click the Continue button to see additional costs and allowance adjustments for year 1 and beyond of lease B. Click the Continue button to see how to analyze this multi-period lease over 5 years. Done. Estimate the total effective rate for the 5-year lease. First, all items with a single total for each year lease, using total costs rather than dollars per square foot. First, let the tenant's time period zero expenditure. Time period zero is the time for lease ends. Net DTI is the net amount of tenant's improved costs. $18 per square foot times 3,500 square foot, or $60,000, minus the landlord's allowance, $12 per square foot, times 3,500 square feet, or $42,000. The result is the cost of the tenant of $21,000. The net existing lease by similarly is the net of the tenant's cost to cancel existing lease early, $27,000, minus landlord's allowance of $12,000. Tenant's cost is $15,000. Net moving expenses are $8,000. The total cost of $15,000 minus landlord's up all of the tenant's time period zero costs give us a total rent cost for the time period zero of $44,000. Moving on to year 1 of the lease term, we see base rent of $59,500, which is $17 per rental square foot times 3,500 square feet of lease space. The next line shows operating expenses for year 1, which are said to be $7 per rental square foot, or $24,500. Below that, we see that the landlord's operating expenses amount will be the cost of the lease. Similarly, the next line shows us an expense for property taxes at $2 per rental square foot. And below that, we see that the landlord's property tax expense stop of $2 per rental square foot, which will be needed against the tenant's cost for taxes in the first year of the lease term. The tenant is leasing 10 parking spaces from the landlord at a monthly cost of $43.75 per parking space, or $437.50 per month, which is $5,250 for the first year of the lease. The landlord is offering the tenant free rent for the first 4 months of the lease term. The free rent line on the table shows that a deduction in the amount of $19,833 will be made against the tenant's base rent cost shown above. Following the plus and minus signs given us in the table, we can calculate the tenant's expenditures. or total effective rent for year 1, as $44,917. Now let's look at what happens to base rent in the years 2 to 5 of the lease term. The assumptions given to us state that the base rent will increase by 50 cents per square foot for each year after year 1. The table shows us what the rent will grow to for each and every year. Below the base rent line, we also see that the operating expenses are anticipated to increase annually at a rate of 3% each year. Applying that 3% year growth rate, we can project total operating expenses for the remainder of the term. The line below that shows again the amount of the landlord's operating expense stop of $7 per rental square foot, which remains the same throughout the term. The landlord's expenses are stopped at $24,500, and the tenant is responsible for the increase over that amount. Same concept applies to the property taxes. We see that the property taxes will increase according to our projection, 3% annually, and that the landlord's tax stop remains at $7,000 for each year of the 5-year lease term. Parking costs are not expected to increase over the lease term. The annual expense will remain at $5,250 each year. With all of the tenant's expenses projected and the operating expense and tax stops subtracted, we can now tabulate the tenant. Based on the cash flows calculated on the previous page, click the steps below to see how to calculate total effective rent and rate, average annual effective rent and rate, and discounted effective rent. Click the steps below to continue calculating average annual effective rent and rate and discounted effective rent. Segment of the course described how to analyze and compare multi-period leases. In the next segment of the course, you'll perform a learning activity to practice analyzing multi-period leases.